Hi, Cher Russell here, editor of the Daily Reckoning Australia. And today I thought we would talk about gold. However, I wanted to do something a little bit different. And I'm talking about the opportunities available to you to invest in gold if you don't want to buy physical gold, or if you've already got physical gold and you're sort of looking for the next way to position yourself in the gold markets. Now, this video was spurred on today by a subscriber who sent me an email at letters@dailyreckoning.com.au. Now, his question was basically, he wanted to know what performs better against the Aussie dollar gold price, gold ETFs or gold mining stocks. Now, before to say one performs best, it really depends. It really comes down to what you want. Now, gold ETFs tend to track the price of gold. That's what they're designed to do. So, for example, ETF Metal Securities Australia Limited, with the ticker code GOLD, tracks the performance of Aussie dollar gold. And the difference is, it's like buying a share on the stock exchange. So you don't need to buy physical bullion to get exposure to the gold price. On the other hand, there is a Beta Shares Gold Bullion ETF with the ticker code QAU. Now, this one tracks the US dollar gold price rather than the Aussie dollar gold price. So this, by using this instrument, it's a way of getting a more pure exposure to the US dollar gold price in Australia. Now, that's in contrast to gold mining stocks. Now, some of our gold miners do track the performance of Aussie dollar gold. So, for example, Newcrest Mining and Northern Star Resources, their share prices tend to be tracking the performance much more closely of the Aussie dollar gold price. But then we've got other companies like Evolution Mining, Anglo Ashanti Gold, and on the smaller scale, Australia Metals. Now, all three of these companies are seeing their share price exceeding the gains that the Aussie dollar gold price is making. So why are they performing better in percentage terms compared to the Aussie dollar gold price than companies like Newcrest and Northern Star? Well, when it comes down to Anglo Gold Ashanti, for example, even though it's one of our largest gold miners, they seem to be in expansion phase still. So they're still looking for bigger gold deposits offshore through joint ventures. So the potential growth there is what I suspect is driving investors into that stock. On the other hand, when you've got companies like Evolution Mining and Australia Metals, the reason why investors seem to be going to these companies is because they are pouring gold on the cheap, basically. For example, these two companies that I just mentioned, Evolution and Australia, are two of the cheapest gold producers in Australia. Australia is pouring gold for around 730 Aussie dollars per ounce, and Evolution Mining is quite similar, around the $820, $830 per ounce. So when you realise that the Aussie dollar gold price is sitting around $1,840, each of these miners are basically, they have a profit of around $1,000 per ounce. So that makes them highly profitable miners, and that is why I believe we're seeing more investors move into those stocks and why that share price is growing. Now, if you are on the hunt to buy gold miners, there's two things that you really need to remember if you're looking for a company that's likely to outperform the Aussie dollar gold price, and that is growth. You want to look for a company that is still in the expansion phase or basically looking to shore up a larger gold reserve. The other thing that you do need to keep in mind is you want to look for a company that can pour gold cheaply. So while Evolution and Australia Metals are two of the cheapest gold miners in Australia, anything under that sub $1,000 category would be considered a cheap gold miner listed on the ASX. That's all from me today. I'll be back next week with more.